Good evening, YouTube. My name is Johan. I know I promised you guys a YouTube channel in English as well. I'm the YouTube owner or channel owner of Free Forex Trading in Afrikaans, and now your channel will only be welcome to Free Forex Trading. So it's only in English. I explained to the Afrikaans guys your videos in the descriptions below. I'm going to put English video 1 and then the description of what we've discussed and what we talked about. And then on the second one, I'll say English video number 2 and English video number 3 with the description behind and so forth. So the Afrikaans people will know that the English videos are with the English video number 1, English video number 2, and then the description. Their descriptions is also in English, just so that some people, let's say someone in English, Google's or YouTube, also on YouTube, Free Forex Training or whatever, so that I can get to my YouTube videos and subscribe as well. So then they can choose Afrikaans or English. I want to cut yours. You are a few videos behind the Afrikaans people, so I maybe want to catch up on 2 or 3 videos to be on the same side as where we are with them. So firstly, welcome to the channel. And there's 3 things that I want you to notice. On the screen, as you can see, is www.tradingview.com. Is where you can see the market. As you can see here, where all the candlesticks are and things like that. Here on the top left, you can see tradingview.com. So if you go to www.tradingview.com, you can open a free account. Just put in your information there and then save it. The second thing you need to do is you need to download MetaTrader 4, the app on your phone, and that you're going to use to enter and exit trades. We're going to talk about it in the near future as well. We're going to make a video on how to enter trades and exit trades and those things, type of things. Just go to when it opens. Let me just open my phone and see exactly how it looks, and then they can help you guys. Yeah, there on the top of your phone. Oh, yeah, there's on the screen, on your phone screen, there's going to be a plus. So you can just type on the plus, and then it's going to ask you open a demo account. So you're going to click on the demo account. Then I'm not sure if there's going to be brokers there, but as you see on the screen, open a demo account with a Wanda broker, OANDA broker. So you just type in the Wanda practice, and then it will give you the options, and then you go through the things. They're going to ask you in what currency you want to use. You just go for dollars, and then keep the account small, guys. It doesn't help you have a $5 million account and you play around and lose half of it as you want. So make a realistic account of $3,000. So maybe in the next month or so, we're going to start trading seriously with this money, and then as soon as we see we can take this money from 3,000 to 4, 5, or 6,000, it might take us 4, 5, 6 months. Then we know, listen, okay, we are ready for a live account, and then we'll open a much smaller live account for first trade as well. I've been trading for just over 3 years now, and I know it's not a lot, but the channel is only for the basics, just to get you guys started. So the first 2 that I've shown you is very critical. So you can't go without TradingView, and you can't go without the MetaTrader 4 app. Then the last one is the Forex calculator. Go to your app store or your Play Store, and put in Forex calculator. Then let me do it, and then I can show you exactly the one that's coming up. Let me just put in there. I already got everything. Forex calculator. Then you use 1, 2, 3. The third one from the top. Install the third one from the top. There's going to be videos how to use all of this as well. Just download these 3 things on your PCs and the other 2 on your laptop, on your phones, and then wait for me to get back to those. So then the last thing I want to pronounce or tell you guys is that I'm going to try and make 2 videos per week. We're going to go through all market structure, technical analysis. We're going to go a little bit through fundamental, but I'm not a fundamental trader. I look out for news, but I'm a technical analysis trader. And I'm going to go through all of it, all of the Forex pairs, how they work, a little bit about cryptocurrencies. The basics are the same. And then I want to tell you guys about my risk disclaimer. So let me just stop share, and then we're going to go through my risk disclaimer before we can start. Let me share screen, and then the risk disclaimer is this one. Let me just share it with you guys. I need to go through this as well. Okay, so it says risk disclaimer in English, or something that I wrote. Please be aware of the loss, risk, and personal or otherwise consequences of the use and applications of this PDFs or trade tools content. The author are not responsible for any actions that you undertake and will not be held accountable for any loss or injuries. Maybe if you pull out your own hair or something. Okay, then Forex or foreign exchange trading has large potential reward, but also large potential risk. You must be aware of the risk and willing to accept them in order to invest in the foreign exchange markets. Do not trade with money you cannot afford to lose. Please, guys, this is very critical. Remember, my channel is for free. And hopefully it will always be for free, but you can learn for, let's say, 4, 5, 6 months with me, and then use the demo. From week 3 we're going to start with demo account trading, and then see for yourself when, if you can see you can make 1 or 2 or 3% a month. I know it doesn't sound like a lot, but we're going to go through everything, and then you can start with your live account. But everything that I'm showing you here is the way that I see things. It's not a the investment channel or a financial advice. So no representation is being made that any account will or is likely to achieve profits or losses similar to this discussed on my YouTube channel. The past performance of my trading style and of the Trade War 3 algorithm is not necessarily indicative to future results. So please keep this in mind. Let me go back to the other screen, and then we can start with a little bit of market structure and what Forex is. Let me share. No, that's the wrong one. Sorry about that. Stop share. Screen share. We must go back to this one. Share screen. Okay, so I'm going to delete everything on the screen here. You've got that. Go back, freeze the video here, and make sure you download all this apps and open accounts here. That's what you're going to need to trade with us. So let's delete this. Okay, guys, then a little bit of background about Forex. Foreign exchange is one currency for another currency. As you can see here on the left, let's open Euro USD. So this pair, you call this a pair. It's the Euro dollar, after Euro against the US dollar, American US dollar. So let me just write this down, get a pen. Okay, so the first pair, this one we've got, oh, the pair is in white. Let me just make it some red. The first one we've got Euro USD. So what this is saying to us is the first pair is our base, guys. The first pair is our base. Let's write it. I'm just going to put the base B for you there. And the second pair is our quote. So this is going to be our quote, and the first one is our base. Now what this means is the first one, the first currency is always going to be 1. So for 1 euro, you're going to pay, what is standing here on the side? You can see here on the side where my mouse is here. In the black there, it says 1 point, let's make it a little bit bigger, 1.086086. Oh, well, now it's moved. Okay, let's say 0.8600. Let's make it like that because it's still moving. So in reality, it's going to cost you 1 euro. If you want to buy 1 euro, you're going to pay $1.08. $1.08 for 1 euro. So always the base is always the first one. It's the base. It's going to be 1, and the USD, and in this case, is the quote because it's the second pair. And this is the amount that you're going to pay. So let's make it simple and let's delete all this and see. Let's go to USD South African Rand. So I can show you guys there. USD ZAR. Okay, whoa, this thing just climbed a lot. Okay, so let's see here. Here it's USD ZA South African rand. Okay, so in this case, the first one is our base. The first one is the B. And the South African rand is the quote. Okay, guys, so the first one is 1. So if we want to buy $1, if we want to buy $1, on the right here it says 18.83. We're gonna pay 18 rand, comma 839. Oh no, it's 84. So okay, let's make it 8900. Okay, so you get for $1 for one base currency, the quote is gonna be 18 rand and 83 cents. 18 rand and 83 cents for $1. So now how this works is there's a lot of currency pairs, but now how this works is we check the market, or the movement in the market is in pips. We call it pips. It's like points. So let's say we move from this. You see this this bottom area here. Let's maybe put a line there. So let's say the market went. You can see it went up, 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 up. Let's say up until here. Now, how are we going to calculate the movement from there to there? From there to there, let's take the first red numbers. The first red numbers here, it says 14. At this time, $1 cost 14 rand and 11, 5, 6, 9, 14 rand and 11 cent, 5, 6, 9, well, all those cents for $1. But in reality, we're only using the first digital the first digital numbers after the comma. So that's only for to make it easier, it's 14 rand 11 cents. But in Forex, we use the first 4. So we use the first 4 numbers after the comma, and the last number we don't use at all. At any of the pairs, we don't use it. So let's just calculate. Just bear with me. The first one was 14, 11, 5, 6, 9. The second one here was 17, 9, 3, 1, 8, 4. Okay, this pen is not very nice. 93814. Okay, so what you do in this case also, you only use the 2 numbers or 2 or 3 numbers in front of the comma, and then the last 4 as well, to calculate the points, the movement of this move. The last one also here is falling away. We're going to calculate that. So let me just take my calculator here. I don't know where's the calculator on the computer. It's 17.9318 minus, it was here 14.1156. So this thing moved a lot of pips. It moved 38162. This is a lot. So this move is a few thousand pips, 38,162. It sounds like a lot, but it's only with the exotic pairs like this, the USD ZAR. If we go to a different pair, we're going to do the same thing. You'll see it's not the same. Let's go back to Euro USD, and we'll take a smaller measurement. We'll take a smaller movement. Let's just calculate. We'll put the lines back from there, and we say to there. So that this upward move. Let's just check this upwards move. How many pips this was? Remember, pips are like points. So here it was on 1.068 and 8. Remember the 4 here, we ignore it. We're not using it. Then this is 1.1127. So we can calculate this one. It moved. The ones is going to be the same, but let's say it's 1.1127 minus 1.0688. So this thing moved 439 pips. There's a ruler to measure this. You see it went 439 or 436, more or less the same. But that's the amount of pips this thing moved. It's a hell lot. It is a lot because we're on the daily time frame. So on the market is, I just wanted to show you. So the pip counts are the 4th number. The 4th digital is the first one. So let's say if this thing moved from this number to 1.0689, and this number minus this number is going to give us 1. So this is in ones, the second number is tens, the third number is hundreds, and then thousands and tens of thousands. So I hope that it's a little bit, I don't know how else to explain it, but it's just points between this number. So you take the higher number and you calculate, like minus the high move minus the low move gives you the difference between the two is the amount of points this thing's moved. So that's critical. You're gonna use that to put your trades in, and you're gonna to calculate your risk and all those things. We're gonna talk about it a lot. So don't break your head about it. Just remember that's what it's for. And then, so the currency pairs are the fourth one on all pairs except for the Japanese yen. So let's say like this one. This one is Euro Japanese yen. On the Euro Japanese yen, you can see there's only 3 digits after the comma, not 5 like all the other ones. All the other ones has got 5, except for GBP JPY, Euro JPY, JPY is Japanese yen. Everywhere USD JPY, everywhere where there's a JPY at the end, the base and quote is still the same, but there's only 3 numbers at the back. So here, on all the Japanese yens, this one is standing at 117. Oh no, this pen is not working very nice. Let me just do it again. 117 042 042. Okay, so there's the comma, and then there's 3 digits behind. This one, in this case, we're also taking away the third number, the last number. On the other one, we took away the 5th number. In this case, we're taking away the 3rd number. So what we're going to do, we're only using the 1, 2, the first one and the second one to calculate pips. So let's say from 116,500 to 116,000. That means this thing, if we throw the 500, so it's a 50 and 00. So this thing from here, if price moves from here to there, that from 50 to 0, that's 50 pips, 50 points that the market has moved. We're going to calculate that again. Guys, please subscribe to I'm going to put it in the link below, my Telegram group. You can ask all questions there. If you don't understand what I'm saying here, I'll do another video for you guys. Just want to catch up a little bit to the other people. So the first thing that was important was how to calculate this pipes, where to see the market, and then how the market moves. So what I want to show you here is the market looks like this. This is all candles. This is all candles, candles going up and down, up and down. So what I've done is, when you open your TradingView account, you will be able to, if you right-click, move the settings, you'll be able to change the background. I used white. The symbols is your candlesticks. You can make it red, blue. I made the blue ones going upwards, and the ones that's going down is red. Now, how this works, let's have a look. How this works, let's just say, let me just go to candles. Okay, that is on the candles. How does work? Let's say the market came up to this level here. Up to this week here. You all can see it came down, came down, came down. There's a small black line here. We call that a wick. So the wick went all the way down here. Then the market came up and it stopped there. So how a candle works is a candle starts somewhere, then it goes down or up. And in this case, all the candles that we use has a wick. Most of them has a wick. It's not, some of them you'll say, okay, but this one doesn't have it. It is that there's some of them will have one, and other ones will have big ones like that, and other ones won't have any at all. But most of them has wicks, as you can see all over here. Now what this means is the price. I need to make another candle here just for you guys to know exactly what I'm saying. So this one is green. Just pretend that it's blue like mine with the wicks. I want to put the wicks in as well so that you guys can just understand what I'm saying. Not there. This thing has a magnet, so it's not allowing me to do it in the middle. But bear with me. So we're in this case, the green or the blue ones. Let's say the blue or the green ones is ones that's moving up. And then the red ones are the ones that's moving down. Now this candle started here. Let's use pink. This candle started, if there were a candle here that closed like this, but it was also a green one, then wherever this candle stops, the next candle must start there. So in this case, this candle moved up, moved up, moved up, all the way up to there, and then it came down and it stopped there. Sorry, this thing started here. I'm very sorry, guys. Sorry, I made a mistake. The bodies always starts together where this one stopped, this one started. It first came down, so it was a red candle up until here. Then it went back and beyond, went up, and as it went up all the way through the black where the wick stopped here, and then it closed here. So there's 4 phases or 3 phases in a candle. It starts, then it goes down or up. In some places, sometimes it just goes up. In this case, it started here, went down a little bit first. So in this case, the candle was red, red, red. So then as soon as it passes this, then it moved the color, it changed the color from red to green. And then it moved all the way up there, came a little bit down, and it closed here. So then the next candle started where this one stops. So obviously on the chart, let's go to the chart here. You can see where the red stops. This is where the blue one started. So the blue one goes up, made a wick, and it stopped there. So the previous candle started here. Let me just show you. Okay, this was over the weekend, so there's a gap. On the weekend you get gaps, but let's see where this one finished. Is where the other one started. So there's a wick, it went down, exactly what like I showed you here. Went up, made a wick, and it closed. And where this closes, the next body must start. So there's the red candle. It went up a little bit. Let's make it bigger. Let's make it bigger. So you can see where this one closed. There's a small wick. It went up, wanted to be blue. No. Then it came all the way down to there, and it closed there. So that's why let me delete everything. That's why there's a wick. There's a small black wick here. But where this one stopped, this was a red candle. That's why it came down. The next red candle started. It was blue at first. It wanted to go up until there, but it didn't. Then it went up. Oh, and it came all down, all the way up to where my taser is here. And then it stopped there. It finished there. Now, each candle has a time frame. So each candle, whatever it takes, let's say it started here, it went up, it came down, went up, and it closes there. So the start were there and the close were there. This whole movement, how long it took this thing to form on this time frame, this is the daily time frame. So it took 1 day, 24 hours for this thing to do all this movement and finish. So let's go, if we go to the weekly or the monthly, let's go to the monthly. All these time frames you can see there, it says 1 month. So now in this case now, one candle, let's just say this candle here came down and the next one started there. This candle came down all the way there and eventually closed there in 31 days. So this candle took 31 days to form. It took 31 days to form. So this one, the next month, it takes 30 or 28. It depends on how long the month. When the next month starts, the next candle jumps in. So if you go to the 4 hour, then every candle is 4 hours long. If you go to the 1 minute, then every candle is 1 minute long. So that's very important to notice. Every candle here takes 5, we are in the 4 hour, it takes 4 hours to form. So this one takes 4 hours, this one takes 4 hours, this one takes 4 hours. So then here you can go, you can see you get a 1 minute candle, 3 minute, 5 minute, 15 minute, all the way to the monthly. So if you go to the 1 minute candle, let's go and see on the real time how it creates and how it forms. Then you guys will be able to see exactly what happens here. Okay, so now you can see it's forming, it's going up, down, and there's no wick to the top. It started there. This one went up and went down and finished equal of this thing. So it's only a black small line. Now this one formed, it went all the way down here. Now it's coming back up. We've got 10 seconds left. 9, 8, 7. Now it's turned blue from red. So now it's going blue. 4, 3, 2. Then the next candle is going to start. 1. There's the next candle. It starts where this one stopped, but if it wants to be red, it's going to come down. If it wants to be blue, it's going to go up. So that's all that the market is. Everything you see here is what the market is doing. So in this time frame, it's 1 minute each. This time went up, down, down. So in the market, there's certain patterns and certain movements and actions that we're going to look at. So what I want you guys to do for now is just go open your trading view account, play a little bit on here, go and see what tools to use, trend lines, draw some pictures on here, and try to understand on the daily, go to different daily time frames in the 1 hour, 1 minute, and see how the candles closes, understand exactly what the candle is, what the wicks are. Then go to your demo account, just open it for us, leave it at MetaTrader 4. And the last one is for the Forex calculator. Download all of those things, please. Open the apps on your phones. And then I'm going to look to make a second video tomorrow. I like to keep it underneath a half hour or so. So this was just an introduction and to the software, to download the software and so on. We're going to get closer to what to look out, how to use the platforms, all these tools, how to use this, and then what to look for in the market. I don't know, that doesn't help me to go out and explain what's going on here and the patterns and things that we're seeing, because then you guys, you're not going to understand what's going on. If I tell you, listen, we're looking at a butterfly pattern here for a down reversal or whatever, you guys are not going to understand what we're saying. So that all will come, guys. I hope you enjoy this video. Remember, all your videos is going to be English video. This one will be English video number 1. So the tomorrow's one will be English video number 2 with the description. This description, I'm going to just say intro to Forex and downloading software. Please go and subscribe and like and join my Telegram group as well, guys. The links will all be below in the description of this video. And then I'll see you all tomorrow on the next video. Thank you, guys.